All right. Jesse says that we're good to go. Excited for this one. We had a great conversation with Matt from Clearbit. I guess it was last week, and this week we've got Russ from DocSend, and it's been an awesome selfish experience for me. I get to learn a lot from guys that are really great at building software. So I'll continue to be selfish, and I'll continue to do these, and I'll continue to trick guys like Russ to come on, and through help of Walter at Sacra, who I'll gloat about a little bit in a second. But more importantly, Russ is who you'll be hearing a lot from today, and we have a cool kind of format in line for that. To get into it for a second, you know me already. You likely do, at least. A lot of you are coming from the newsletter as loyal subscribers for the last couple of years, which I appreciate. Maybe some Twitter, maybe some LinkedIn, maybe some YouTube. I don't really think we have any YouTube fans. But if you're into this type of thing, Luma/Sandhill Markets, Sandhill Dash Markets, you'll see a full live calendar. We have an AI productivity panel next week with some great founders to talk a little bit about kind of how AI is affecting that space, which we're excited about. But much more importantly, Sacra, great partners. Walter and John doing great, helping us meet people like Russ, who again are going to make us smarter about software and tech more generally. If you haven't checked out Sacra.com before, please do. They deserve it. Walter deserves it. And finally, I actually have a fun version of this. So I'm actually going to, instead of me presenting a little lame Canvas slide, I'll pull this down and I'll pull this up. This is Russ's new startup. It's called Distill. It's distill.fyi. You can. I think I'm trying to see how much of the page you can see, but you can see the bulk of it and what Distill does. And I'll let him give a better explanation of it. But it's like a supercharged LinkedIn. So he described it really briefly as that task of, and the workflow of when you're trying to get to understand what someone does or what they have done, and you take 30 minutes, 45 minutes. Something I do before these calls is LinkedIn stalk our guests. This does that really well, and you'll see that. So there's a lot of LinkedIn type information in here, right, about what where Russ is located, basically how old he is, a little biography, and then they use AI to go deeper than your basic work experience that you would see on LinkedIn. And they do that here, and you see actually that they pull 42 different sources into this. So 42 different sources. I don't hit 42 sources when I internet stalk our guests before they come on. If I was really, really good about it, maybe I would hit 42 sources. Distill.fyi does that for me. And he described it as trying to just do one thing really, really well. And it seems like they're doing it. So we'll hear more about that. But so this is Russ. Russ was, how you probably know of Russ or heard of Russ is you've probably been sent a DocSend link at some point. I definitely have. Russ doesn't know this, but I don't think he knows this, but my last company was called OnePager.vc, and we did like a presentation tool for fundraising founders. And we took a lot of inspiration from DocSend. Inspiration's a cute word for it. A lot of inspiration from our analytics page from the DocSend analytics. So they really DocSend is broadly used tool, continues to be a broadly used tool. So he knows a lot about building software like that, and he's going to talk about it in our session today. So I think I did an okay job of, one, killing some time, two, introducing Russ as and ultimately we'll get him up here. So I'll pull this down, I'll pull Russ up, and I'll make this a better display. Hey
Adam, thanks for having me on.
Hey, how was my screen switching? I think I actually did okay from one screen.
I thought it was great. Yeah, looked pretty good to me. And yeah, that's I'm glad that the last one was inspired by DocSend.
Yeah, I know we didn't even talk about that, but when I was that was my first. I had a company straight out of school, but in the mattress space, not really a software company. Startup's a big word for it, but that's how I kind of found out what Venture was and all that. But the first software company I ever built was OnePager.vc, and it was sharing tool for fundraising founders. I used to describe it in my little one-liner as Notion meets DocSend. So it was like a profile page, not dissimilar from Distill. So I've been kind of messing around in this space for a while.
Awesome.
Yeah, hopefully
on your Distill page, I see a note that you sold it to stonks.com. So
yeah, exactly. Well, look at that. Okay, well, quick. Well, I'm excited to get into that part of it. But to outline it, to outline the day, or the little session, you have some slides that you and that you've given this presentation before. So I went through it. It's a great looking presentation, and I will. So you'll present these slides, and I'll stay up here with you to ask them questions and to represent kind of the audience and keep it a little bit more conversational. And then it sounds at the end we'll get into Distill a little bit. So this is things I wish I knew about building self-serve software, really built around your DocSend experience, correct? And then we'll talk about Distill after, which maybe where you're applying some of those lessons learned.
Yeah, the lessons are primarily from DocSend, but I also was very early at Trulia as an engineer, and then also worked early at Dropbox as a PM intern. So a bunch of the companies have had a self-serve motion to them, but yeah, this is just drawn from DocSend. It's more of a deep dive on the lessons taken away from that experience.
Cool. And just as the first to kick the dumb questions off, self-serve versus like product-led growth, those in the same kind of conversation? Like is self-serve software a part of that like movement, or like the PLG stuff?
That's a great point. I have not thought a whole lot about the branding around it, because it's like, what does product-led growth mean? I think as a founder, we'll get into this in the slides. Yeah, it kind of comes down to like running a good business, and like what's your acquisition cost, and then what's your LTV. And investors get very into these things, but even just practically running a company, you kind of want to lower your acquisition cost if possible, and then kind of have a good LTV to it. So, just running a good business. And so when I say self-serve, what I mean specifically for DocSend was the relatively small accounts that would come in and just put their credit card into the product. So we were happy to talk to them, and you could talk to support, talk to sales, but they were distinct and different from the big accounts where we'd be selling 100, 500 seats. Kind of this like outbound, more enterprisey thing. And those people wouldn't come to us, or they'd come to us relatively rarely. Yeah. So the self-serve part of the company was the part that was just, we got that engine going, and that was great. Yeah.
And that's the more, well, anyways, I don't want to, we have lots to talk about. So cool. I'll get these slides up here. And I think that this works from, let's see we'll play with some different, that doesn't work. This could work. This works ish. I think let's go left to right. Let's go left to right.
Cool.
Good by you. All right, cool. I'll let you take it away, and again I'll chime in with dumb questions along the way.
Yeah, absolutely. Yeah. So for those of you who don't know, just a little history on DocSend. We started the company in 2013. We were at first headquartered in San Francisco. We, in the life of the company, raised $14.7 million in venture funding. We sold it in March of 2021 for $165 million. Which was 11x ARR at the time, and we were profitable and sold to Dropbox. They were very pleased with the acquisition, and we hadn't raised that much money, and so it was a good exit for everybody involved. And a lot of that had to do with the go-to-market motion for DocSend is pretty similar to that of Dropbox. So we will go into the first part of this, which is basically just a story in cash and ARR. And I didn't put any like numbers on here because I just want to kind of give a sense for like the arc of stuff. Rather than go into specific numbers. So I'll just fly through this, Adam, but pause me at any time. I think for anyone else who's been a founder, like your cash bar is kind of your stress level as the CEO of the company. And so it like says a lot about my mental state, like how low
that green bar is. Yeah, exactly. I can picture you at those little green bars at the beginning.
Yeah. And so we raised a seed round, Uncork. Highly recommend them. They're awesome. Also, Lair and Cowboy participated in that. Highly recommend them as well. And when you're raising a seed round, it's just, you're in the honeymoon phase. You're like, yeah. And so we were going to be this like self-serve document analytics tool. We launched it at Disrupt in New York in 2014. So it took us about a year to build out our first version of DocSend. And then shortly after that, we actually in Q1 of 15, so about a year later, we decided, okay, we got to add in some revenue here. So we started with a $10 a month plan, just to start charging anybody something for the thing. We got a preemptive Series A from August Capital, now Lobby Capital. They're also fantastic. Highly recommend them. And that was when we weren't quite ready for it yet. We didn't have the numbers, but they had a lot of faith in us.
Yeah. And so tell me Explain that what you mean by preemptive there, where you weren't really ready to fundraise, but they caught you like, oh, they're gonna go fundraise, let's go early. And
Yeah, and so preemptive will happen if, as a founder, you've got a relationship with a VC and they've been following you for a while.
yeah,
And in the case of August now, Lobby, I had pitched them for the seed round, but we were too early. They were at the time investing out of a $500 million fund, but we just kept in touch. And then they just kind of watched us execute on the product, and they just started getting DocSend links from people. And so they were like, they're going to figure it out. So they came and said, we would like to lead the Series A for you ahead of you going out to raise it. And so they gave us, like decent terms, and I shopped around and everyone else said like, yeah, you're not ready for your Series A yet. So I said, okay, we'll take this from August Capital. And it was great. Like, I'm very happy that we took that round from them. Like, could we have gotten a better price later? Maybe. Could we have also died? Probably. It kind of depends on how much cushion you want for like how long it's going to take you to figure things out. So one of the things we did, because our self-serve at first wasn't growing that fast, it's growing a little bit, but not quite fast enough. And so we had sold a couple 50K sales deals. And so one of our investors was like, do that, sell at market. And I was like, okay. And so we hired up a whole sales team. We said, we're going to sell at market just in the sales teams. And that was a big education curve. It's working, but not very well. So the red bar here is the enterprise ARR. And I just distinguish this because it's not really enterprise, it's more like mid-market. These are like 20, 40, 50K deals, the occasional 100K deal, but they're not $1 million deals, obviously. And so we're closing them. We're doing outbound, we're doing cold outbound, we got SDRs, we got AEs. We're not growing fast enough. And, our investors were losing patience. And then, fast forward and self-serve, the blue bar is ticking along, and then enterprise is like also ticking along, but it finally overtakes the self-serve ARR. But at that point in time, we spent a lot of that Series A just on this outbound sales, and the payback period is long, and it's like getting more competitive, and our competition, the biggest one was HighSpot in sales enablement, is just like kind of like beating us because they were aimed at the economic buyer for an organization like sales enablement, and DocSend was originally built for the end user. And so we tacked on all the stuff to be relevant to the economic buyer. But, the bigger the company, the more different it becomes selling to the person who's in charge of the budget versus like the end user. In a big company, the economic buyer often doesn't care about the end user experience. So we've run into these situations where the people at the company who are using DocSend be like, we love it, it's the best tool, it's great. And then the person in charge be like, no, I'm buying this other tool for it because it has more of what I want for admin dashboards or whatever it happens to be. So anyway, at this point in time, it's looking not great for DocSend. Investors kindly tell me that it's probably not going to work. Say, good job, you tried hard, it's not your fault, return money, we'll back on the next one, you did what you could. And we had maybe like 4 million ARR at that point in time, and I was like, not ready to throw in the towel here. So I went off and like interviewed hundreds of our users because I was like, there's something here. We just need to figure out what it is. And so based on those interviews, we changed up our pricing, packaging, and positioning. So a rare instance of like an MBA being helpful for doing the businessy stuff,
Great. This is big. This is big.
Yeah, working with one of our VP strategy, Brian Gertner, on this. We called it Project Couch Change because we were trying to just make 50K in additional ARR, and we got tens of millions out of this, like little change. So I think a lot about message market fit and how important that is, especially when you're in like product-led growth. So after we make these changes, and by the way, we put in, like, we had that $10 a month plan. We then put in a $150 a month plan. And then we also, instead of selling enterprise, we just made it like you can get all these features just with a credit card. You don't have to talk to sales. So we put that in as our standard plan. And it was fascinating to see how many people were just paying for like the expensive security plan. We didn't even know what was supposed to be there at first, but we saw it's working a little bit at this point. So I'm like, yeah. So then based on that, we raised $5 million from a friend of mine, Kyle Louie, who's now at Bling Capital. Highly recommend them. He was at DCM at the time. And we had a term sheet actually for 20 million, and I turned it down for 5 million because I was more aligned with Kyle on what we wanted to do with our company. And the 20 million would have come with kind of like the expectations that we go try to sell at market again.
Yeah.
I was like, I just don't think that's the right thing for us right now. Yeah. So it was confusing for our team because we'd raised 8 million before, but this was an up round. It was a great up round, 5 million, but it wasn't that dilutive. And we gave Kyle a board seat, which was great to have him involved. And then based on that, we actually fired a little less than half the company that was working on enterprise. Not because we needed to from a cash perspective, but because it was just too confusing to be building the features for the enterprise customers and then following this thread around like, oh my God, we're having a lot of people sign on 1s and 2s and 3s and 4s who are just loving the product and swiping their credit card. And so like we should just do that. So that's what I told our company that we could do either, but we wanted to focus. And so we're just going to do the self-serve stuff. And one of our engineers was really nice about it because I was very nervous announcing this to the company. He's like, so are we just doing the thing that we're like good at? And I was like, yes, that's what we're doing. We're just doing the thing that we're good at.
But I love the wait. So we're gonna do the thing we're good at, right? Yeah, that's that. Let's do that.
Yeah, exactly. It's like a really good way of just like making it very simple. It's not personal. Like we could do enterprise if that was all that was available to us, but like, hey, this thing over here, it's working. You just show the numbers and we're like, eh. And so you can kind of see the blue bar then just kind of take away. We didn't fire the enterprise customers, which is worth noting. And we did hire back account managers where the account managers were like, okay, knowing that we weren't going to build the features to keep their accounts. And so it was much more of a situation of like, just keep these customers as long as you can, but we're not going to build their features, but just be nice. Just be a nice, helpful human so they stay with us longer than they probably should. And that worked out great. Like that revenue was stable. It actually started to expand over time. And then the self-serve just started to take off primarily from the advanced plan that we had and more security. And so we just kept burn low. We never touched that much of the 5 million. And then you fast forward to kind of Q1 of 2021, we got an inbound offer from a public company. I'd interned at Dropbox and kept in touch with them. I asked them, they made us an offer and asked our board and they were like, you almost died a while ago. This seems great. You should take it. And we were 8 years into the company and we took the offer. And it was a reasonable deal. 11x ARR, Dropbox was happy. Like on our side, it was like, it's very hard. Like how many people do you know that have $165 million? And, we've been at it for 8 years, so we weren't sure what would happen. And interestingly enough, like, we kind of ran this experiment selling it to Dropbox, the standalone, just looking at the standalone revenue, it just continued to be super strong. It's not demand gen oriented. It's like the number one channel is word of mouth, which is fascinating because people like it. It's, you could say, oh my God, DocSend's very niche-y. And it kind of is, but it's also like people send a lot of documents. And if they're important documents and you want control, like Adobe's pretty clunky and Microsoft's not great. So like, what do you do? Go to a really expensive data room provider? Like that's not great either. And so we just kind of became synonymous with this, like sending secure documents and maintaining control. And fundraising was a great use case for that, obviously. And Adam, I appreciate you tried to, like a bunch of people tried to displace us from that, but like, DocSend works pretty well for it. So,
that was our experience. Exactly our experience.
It's kind of hard to be 10x better. And so, it just was wild to see the growth continue. And,
before we move on from that slide, actually, cool if we go back, because I want to talk about the curve a little bit. And just the overall storyline as you look back on it, because I know we're going to get into more of like the actual tool stuff and like product decisions. When you look back on this, so that decision to take 5 instead of 20 feels like a big moment. Because if you had taken the 20, would that have made the exit like less palatable? Like when you look back on that moment, right, where things are starting to work, but because I think that's been a really big conversation in these current rounds and people raising like crazy amounts of money and, people wagging their finger like you're fucking yourself because now you're never going to once you raise so much, you make really big later promises. It sounds like that was more like a you and Kyle getting along decision. But when you look back on that moment, does it feel like, something's, it would have closed doors to take more money, or do you think it would have all stayed available?
I don't think it would have closed doors to raise more money. It would have been at a higher valuation than the 5. So we took a haircut of valuation to raise less money. And would that investor have been okay, like selling? Like maybe not. So it's possible it would have closed the door. It depends a lot on like the investor that you're adding to your board. It depends on like how much preferred they're getting, preferred rights. I think for me, the 5 million made more sense just because I had alignment with the investor on what our plan was going to be. And so in our situation, it wouldn't have felt very good to have taken the larger amount of money, but then not have wanted to do what they thought we should do. So, with that in mind, like it was definitely the right decision for us. And you can also see like we didn't burn that much of it. So like if we had raised 20, it wouldn't have changed my thinking around what to focus on. And I do think that's a common problem with companies. If you raise too much money, like it had nothing to do with the money that we got rid of, like the enterprise side of our company, because it's just confusing from a decision-making standpoint. And it just takes overhead to have multiple go-to-market motions. So that was just better for us. But we got to kind of accidentally profitable in 21 because we were just growing our engineering team. That was where we were spending the incremental money. And what I told our team is we're growing faster than we can hire good people and onboard them. So, but that's the interesting thing about this go-to-market motion is that it doesn't require a lot of demand gen spend. It doesn't require any outbound sales. So there's not a lot of go-to-market costs. A lot of your go-to-market costs are like relatively fixed. We can get into some of those strategies were on marketing and go-to-market, but we just primarily needed to keep making our product better, which was engineering hiring. And my co-founders and I have all been on quite a few engineering teams over the years, and it just gets really confusing if you hire too many people too fast.
We had a cool conversation about like hyper scaling and people who had been involved with teams that had gone from 50 to 400 people. It just seems just so crazy to like stay on top of everything. The other question I had just about this graph, because I think it's the right time to get into this type of thing, is like on the market sizing perspective and the pressure to push up market, it from the VC conversation, like was it a market sizing driven thing where it was like you should go up market because the contracts are bigger and we can actually size that, and that's where you can, whereas you look at the long tail where ultimately you guys have you've had a lot of success more in the long tail of the business. It's harder to to say, like, it sounds way more flimsy to be like tons of people use are going to spend $50 a month or $150 a month compared to the enterprise version of like we're going to close these 10 and that's going to add $1 million ARR. Was market sizing a part of the conversation, or was it something different?
It's market sizing, not so much market sizing as it is just like the other investor wanted to run the playbook of like get big contracts and stack them on top of each other.
So more of a playbook thing than a
correct. Yeah. Although in 2018 there wasn't as much like belief in product-led growth. Like when DocSend started in 2013, there was nothing around it. And now you've seen a bunch more examples pop up. So people have been like really into it. It kind of feels like it's kind of died again as like a fad. And now people are like, immediately, there's no more freemium, and we actually killed the freemium in DocSend as well.
Interesting.
Which I think is interesting, but.
From a timeline perspective, it is funny because now in the current content, the PLG, product-led growth has definitely had this big moment, and it's waned for sure. But this makes it feel like it's all right now. But yeah, looking back to 2014, having that conversation, saying product-led growth in a VC meeting in 2014 wouldn't have been like, oh yeah, cool, that's the thing right now. Like towards 2019, 2021, got it.
To your point about TAM, though, we did some rough math around the fundraising market and came out to about 65 million a year is what we thought like the total TAM was, just if we got everyone who was fundraising to use DocSend, looking at the mix of who would be paying for which plans and their sizes. And so 65 million a year is like very small as like a total TAM. But with DocSend, it was only ever, like at most a third like fundraising revenue, because we got a lot of sales revenue. Even when we stopped trying to get more like upmarket sales revenue, we still got a lot of small sales teams into DocSend. There were a lot of internal use cases. A lot of CFOs used it, investor relations. There's just like a long tail of banking, financial services. A lot of people want to send password protected PDFs, stuff like that. And so there was a long tail of applications for DocSend where people were willing to pay like a premium. And so the personal plan is still $10 a month for DocSend, but the advanced plan at $150 a month is most of the revenue. And that's where most people went. We also did smart things like be on a reverse trial. So you start with advanced, and then when it's done, you have to go back to personal. And that's kind of painful.
You feel the
it's a good way to price discriminate, because like you really only go to personal if like you just really can't afford advanced. But for a lot of the people, like advanced that's what they want. That's what they need. They want the dynamic watermarking. They need the forward tracking. They want it to be secure. And that was just a good price point to have. And so the TAM for that was just bigger, I think, than anyone thought. And even so, like DocSend, this graph, we're not big enough to be an independent public company, right? So, TBD, like what it would have done. We would have needed to go take on the full data room market, for example, which is a couple billion a year in spend, but a lot of that is in big banks.
Yeah, and very entrenched in it's not like a software. I don't know. There's cultural aspects of what that we talked about that too, and then we'll continue into the presentation, but we talked about it a lot at one pager where there's also like, and you guys did a great job with this in the fundraising, in the VC space specifically, of like sending a doc send was like allowed. Like there's sending the wrong thing or like using certain tools because there's a certain amount of signaling that goes on when you're sharing, whether it's like, it's IR stuff or it's, fundraising materials or whatever, that it's not necessarily like culturally, it's not like the cool, I don't know if cool is the right word, but it's not like the thing to do. And that breaks into like the software just being better also. Like a lot of the data room tools are like ugly and clunky and like all this stuff, but it's just it's what you use, what everyone has been using, and to bring in a new tool can be more of a trust loss than the efficiency gain like warrants or whatever. But
yeah, we'll get into one of the couple of the strategies that we had with marketing for DocSend, but it was definitely like a social movement type of thing. Where when we were first starting DocSend, any VC I talked to hated getting DocSend links because they were like, just send me the PDF so I can store it on my computer or forward it to people I don't want you to know about me forwarding it to. I was just so annoyed that like DocSend was around. I remember going to like a holiday party and it's like, talking to a VC and he's like, what do you do? Like, oh, I started this company DocSend. He's like, DocSend? I hate DocSend. And someone else comes over like, do you say DocSend? I also hate DocSend. And so I would joke that the reason I started it was just to annoy as many VCs and as possible in parallel. But I think over time, like over time, what we wanted was a social norm around like, I'm sending you important information. Like I have the right to understand, did you read it or not? Totally. It's really nice for version control. It has all these other positive benefits to it. So it eventually did kind of come around to being an accepted social norm because the workflow of fundraising is really hard for founders anyway. And DocSend is like a small saving grace in the whole thing. Totally. So, VCs have just learned to put up with it.
Good. Okay. Well, I'll let you continue.
No, this is fun stuff to get into. And it's funny running a company for 8 years, you pass through multiple cycles of the market, right? Yeah. So these things take a long time. Totally. We always joke that we'd be an overnight success after a decade. And so, the hockey stick is about, a decade, and we sold after 8 years. So it takes a while. Yeah. As it relates to inbound or product-led growth or kind of small customer type of acquisition stuff, if you're going outbound and upmarket, you can create an Excel model that says like, I will have these salespeople, I will pay them this much, they will do this many outbound touches, they will get to like this many qualified leads, and then this will funnel down to like these contracts. And so, you can say like, oh, we will hire more salespeople, we will get more revenue. We're going to ramp up our go-to-market. So you can kind of plan how much you're growing based on how much you're investing. Product-led growth is frustratingly like, you just don't know what's going to happen because like if your growth is coming from word of mouth, you're like, okay, cool, people love the product, it's spreading, but like how do we do
how much? How do I hire for it? How do I
exactly. And then the funny thing in talking to like other like investors at the time when we were fundraising, they were like, how do you know where it's going to be in a month or two, or how do you know it's going to keep continuing? And it's like, I don't know it's going to keep continuing. And I was like, I can't tell you where it's going to be a year from now. And that was very unsatisfying. The way we did our growth cycle though, and this is probably the right answer to this, is just identify areas in your existing user base of high need and then build them. Mm-hmm. Remember I was at Meta before, Chris Cox, who's still the head of product, was talking about the early days, saying that they would just watch where users in Meta would go and where they would be frustrated. Like they would just go check every single profile for new information. And so it's like, we should just launch a news feed so you don't have to go check every single profile
all these people
every single time.
Yeah.
So like similarly in DocSend, we would observe like user behavior, and people would do these weird wonky things to send one link to a collection of links. And we're like, okay, I see what they're trying to do here. They're trying to send a folder. They're trying to send a landing page. They're trying to send a deal space, call it what you will. And so we identify things like that, and then we go kind of suss out what it means, and then try to figure out how you would use it, and how common is this need in the user base. And we build it, and so then the growth cycle is really just kind of attracting new top of funnel. So with we call it our Spaces product, but it's a data room, it's a deal room, it's an investor relations portal. It's all these things. We would have all the landing pages of the marketing site to tell you that this thing is for you, and then it would convert, and then we would retain. And so you just kind of make the product sticky. You kind of expand what you can do. You make sure you're really good at what you can do and solve those needs, and then you just kind of keep iterating from there. And so it was really fun to just follow that thread. Although it is hard to predict exactly how much growth you're going to get out of any individual feature that you launch.
And fun when it works, right? Because when it doesn't work, when I'm sure, and maybe you have some stories of like, there's definitely some, and we had this experience at OnePager plenty of times, right? Where it's like you try to suss out what you think people need or what they want or whatever. You spend the time identifying, you spend the time building it. Maybe it sticks, maybe it doesn't. Were there times where you had false starts? Because that's, I think, the part where people get scared about the product-led growth is because there's that leap, right? Like you identify, you spend the money to build it, and then you throw it out into the market. And then if it works, right, people pick it up. It's great. Like, all right, that one's working. Let's go do a new one. But if it doesn't work, then unlike, a sales hire where it's like, well, if that sales hire isn't performing, I mean, get a new sales hire in there. That's probably like they should be pretty mathematical about the approach. Like, were there times when there were false starts in the cycle, or was it generally a pretty high hit rate on like the identified to build to usage?
It was a high hit rate for the small users, like the 1, 2, 3, like the end user.
Yeah.
It was not a great hit rate on the economic buyer. So when we were building out like deeper integrations, or spent so much time on our Salesforce integration, people wanted AI-driven content recommendations in the system, which just didn't make any sense to me. I'm like, you don't even know what you're asking for. But we built it, and then it was just weird. I'm like, this doesn't make any sense to me. So there were features we built that were like, oh my god. And then they failed to convert the sales leads that we were hoping for.
Yeah.
And so it's possible we weren't as good at sales as other companies. Maybe we could have been better at that. And it's still like not a guarantee, even when you're in outbound sales, if you build a feature that it'll help convert. Because sometimes people, I think, say like, it just as a nicety, like, oh, if you had this thing, then I would go.
Totally. Yeah. It's no
guarantee.
And whereas it's the classic, YC or just general startup like mantra of, talk to your customers, but I think that there's a difference between understanding your customers, which I think in the product led, like when you actually see what they're doing, like their actions are not like, they're not lying about where they're clicking or about like how the actions they're taking. Whereas like interviews or asking like, an economic buyer, someone who's got a lot of power about like, hey, do you want this thing? If you had this thing, that's so much more variable in terms of, but yeah, it's an interesting balance of, we dealt with that so much. And it's more of just like the challenge of startups in general. If it was really, if all you had to do was ask someone what they needed and build it, startups would be really easy.
Yeah, well, I get asked a lot about like what you're tracking as well.
Yeah.
And so like this is like a vanity metric of links per quarter, where every time you send a DocSend deck, it's a unique link. So if you're creating new links, then that's a unit of value, right? So you can just see this kind of go up over time, which is cool. That engagement's going up with the product. This is like how we're tracking data rooms. We had a bit of a false start. It took a while, but like you can start to see this like incremental engagement with the product. And then when we added e-signatures, like that also did really, really well. And then like we just made it easier to get documents into the system. That was like just a pain point of like uploading documents.
Wow, that's crazy.
And so you just see like people putting way more content into Docs. And
5 years in, like that's crazy.
This is like very exciting to see these like things where it took a while to get adoption of these new products. Even when we built them and they were the right thing to build. So there's also an element of patience in this that is hard to stick with. In terms of like where the users came from, the direct was always our number one biggest channel. People just type in docsend.com and they would pay us. And that was,
great.
It's like pretty wild. And like some of the anecdotal ones would be like, the CISO at a public company is complaining to a friend in VC about sending out specs for things that are sensitive and they're worried about them linking. And he was like to his VC's friend, you must deal with sensitive documents. What do you do? And the person's like, are you kidding? Are you not using DocSend? Have you been living under a rock? And so we get this, inbound request for like a big deal at a public company. And it's just funny that, like people do talk about stuff. If you do something well, then generally people will talk to others about it.
When you guys first got into, when you were, pitching way back when, pitching DocSend, were you aware of and harping on the kind of inherent virality of a sharing tool? Like, it is like a sharing tool, right? It's built to, be shared with other people. Was that a part of like the pitch, or was it like a happy coincidence? How aware were you of that virality?
We leaned on it heavily. We said this is going to be really
from the beginning.
It's going to take off. But what was interesting is when we first launched it, it was like very linear growth. It was not viral.
Yeah.
People who receive DocSend links like often don't need to send DocSend links.
Yeah.
So think about a sales context. If you're buying software for your company and some salesperson is sending you collateral, you're not necessarily sending out a bunch of your own collateral.
Yeah.
And similarly, like VCs don't send out that many decks, with the exception of they do their own fundraising, but it's like every 4 years, right? So it's just different. And so we did get a number of like signups from like viewing a document in DocSend, but it just wasn't the number one. So it happened, but it was also very delayed. It was not like immediate.
That's an interesting word, because we're the classic, a really like tight and like exciting, viral loop would be like, the social media version of like, you get sent a link, you need to sign up in order to view the link, or you go from never having heard about the thing ever to hearing about it, to signing up, to creating your own link and sending it out relatively quickly would be like the great version of it, or it'll be like the social media version of it. Whereas in the business use case, it was more like you see a link, you're aware of it, and then maybe the problem arises, months later. You're like, oh, like I need to do this also, and then it's more of like a word of mouth, being the better word than virality, maybe.
Yeah, it was definitely word of mouth is the number one source. And the other thing about DocSend is we tried to make it pretty low key. Document sending. We tried to not be like overt. It's white labelable, so you can just put your own brand in there. And we just tried to be low key. So we weren't trying to hit the viewer over the head. Our thought was like, we need to be really useful for the sender, and we need to be easy for the viewer to get in and look at the material. And it's much more about the sender getting their job done, whatever that is, than it is about DocSend, like putting ourselves in the middle and being like, look at me, sign up for this product. And we did run experiments on that, which I'll show, but It didn't work that well. Yeah, word of mouth, always the biggest source of new traffic. And then team invites was always a big thing too, like just spreading within existing teams. The instances of us going from like a few users to over 1,000 users, at a company, and it's not quite like Slack, but it still has like some land and expand properties.
And one last question on this graph. Referral code, how much we spun our wheels on referral stuff. We did so much, like, we wanted the referral to work really bad. We tried stuff. Did you spend a lot of time there, or was it just was that ever something you put a decent amount of time into, or was it just something you had because it's kind of, a way to complete the channel like strategy? Or what was your experience in that yellow sliver?
We tried so many things, and almost everything didn't work. So, our joke was always like, the revenue graph, it looks like this perfect hockey stick. And then the joke was like, when people look from the outside, they're going to be like, oh, they just got lucky. Like on the inside, we're like fervently like spinning our wheels, like trying all this different stuff, like trying to go a million miles a minute. And with the referral codes, we did try a lot of flavors of that. The flavor that worked the best was when we paired research reports on fundraising along with discount codes that would be given to a VC with a special branded portal for that VC. So their portfolio companies could get in and get a discount through their VC. And then they would also be able to read the research reports that we had on fundraising. So that finally worked well, but it took a lot of effort to get there.
It's freaking referral, because there are some. I think Dropbox is really like the famous example, right?
They were great at it.
Like Hotmail is the other like startup lore example, where the referral, like, it's just like this magic. You do like this one thing and it turns into like this hockey stick because the referral program works so well. And we tried so much, like had the same exact experience, it sounds like, where even the referral version that worked for us was pretty manual. It was a, a targeted like partner based approach where they get a code. And since they have the code, they're more excited to share it and all that stuff compared to like what the Dropbox one was, if you get to a certain amount, you have to, if you want more storage, refer a friend and you'll get more storage thrown at you. And that had, it's like this famous case study of like, oh, it works super well.
Yeah, I interned at Dropbox in 2010 while I was in business school, and there were like less than 20 people at the company. And yeah, it was going great that summer. And they created this currency, your space. And so you wanted more space. And so you'd refer, and like they got the mechanics of that. They just nailed it. Like it was amazing how fast that worked for them. Hotmail was more of the classic viral loop. Like a recipient of email is also a sender of email. That's always bi-directional.
Yeah.
And so they were just but it's rare that you can get these things to work perfectly. One of the things though about like the self-serve or targeting smaller ACV customers is that the evergreen channels, like whatever you can find, you got to go find them. Yeah. Sometimes there's like a one-hit wonder, but with DocSend, we never had like one cool trick. It was a bunch of things that worked over time. Yeah. You can see that finally kind of compounded along with a great product that people genuinely liked. Yeah. Like no go-to-market strategy is going to compensate for a mediocre product. Yeah. But you can have a great product that fails to have a go-to-market strategy, and so no one knows about it.
Yeah. God, freaking referral codes. So much. My co-founders are probably watching this, like, just shaking their head. We just tried some. It's just a. I tried so many things. It can be a trap. It can be a trap, right? Because you want to, and the answer and like the things you learned, right, is that, you're going to stack a bunch of strategies on top of each other that grow your inbound rather than like, hoping and, swinging for some one thing that works super well is a tough way to go.
Yeah. It varies for every company. It's so interesting. The companies I've worked with or invested in, like sometimes they find one big trick. Other times it's a bit slow and incremental and builds over time. One concept that worked out very well for DocSend though, when we pivoted back to the self-serve stuff, when we changed the pricing, packaging, and positioning, was that we went from being like sales enablement, because like when we just said sales enablement on our website, people would like ask support, are you the service that does blah, blah, blah? And then we'd be like, yeah. And then they just like start paying us. And so we were like, actually, we are a horizontal product that we market vertically, because that's just what DocSend was like, and still is. It's like generally pretty useful in a lot of situations. So we, on our marketing site, actually talked about the utility of the product for different use cases. And that caused our conversion to go up a lot, and it helped with SEO too. So there's a big gain we got by just like talking about the product in the context of the people who are buying it, to give them more faith in the tool doing what they wanted the tools do. Yeah. So it's definitely like a strategy I think more startups can employ. The downside of it though is if you're selling into sales enablement, for example, and the salesperson is going to buy, like $1 million of your software, and they go to your website and you say you're for all these things, they're going to be like, well, this can't be for me. You're good at all these other things. You can't possibly be like great for me in sales enablement. And so there's just like an inherent handicap you have with this strategy versus like the vertical SaaS tool that says we only sell to you, and that's our specialty. So there are pros and cons to this, but it worked great for DocSend.
And do you feel like that's a part of the benefit of the price point, right? Like, because you're describing like the big enterprise contract, you probably have to be verticalized to, really take, $1 million contract all the way through. Whereas if you're hanging out in that, $150 a month range, you can, build enough trust in each of them to get to that price point. Do you think that is that kind of the lesson more broadly?
I think for DocSend, we built a lot of the enterprise features. So, before I left, we had like there's at least one customer with over 1,000 seats on DocSend, which is a lot of seats on the product. So it scaled up pretty well. I think when we think about the trade-offs, like it works well in that context when it's land and expand, because if someone comes in and says, oh, I like this other tool more, the inertia from the internal teams already using it, they like can't get away from like it just does these things really well. Yeah. And so then the other thing like needs to displace you. And so we would usually win in land and expand situations. Got it. And the enterprise revenue like hung out and it actually started to grow. But we would not do well if we were at a cold start coming in from the top versus another tool that is a specialist.
Yeah, got it. Okay, cool. Yeah,
Same with data rooms though. Like for a bank, if it's like DocSend versus Intralinks, like Intralinks just does this all day, every day. That's all they do, right? So it's of course Intralinks is definitely an older, slower company in some regards. So DocSend had started to take away some of the bottom end of their market share. But yeah, this is both good and bad.
Yeah, interesting. But it again works for where you were like
relatively. I called it a relatively transactional price point. So like
exactly. That's what I was trying to get at. Yeah, the swipe
like $150 a month, like $1,800 a year.
Yeah,
and if it's like us or like some other data room provider that's $15,000 a year, it looks like a steal. And so people are like, oh my god, this is so much cheaper. And the way we thought about that was, we're not spending money on sales and marketing for this, so let's just make it like pretty transactional as a price point and have people try it out. And so that worked well in a lot of situations.
Yeah, good, nice.
So yeah, a lot of customers like $1,000 ACV, so you couldn't afford to spend money to get $1,000 ACV, right? That's like a pretty low price point.
Yeah.
It's not consumer, but it's not. If you got an acquisition cost of $20,000 for an enterprise account, that's just not going to work. So you were asking about some of the things that we tried that did not work, and this is a very non-exhaustive list of a few of the things. So we already talked about selling at market too early, like just having multiple go-to-market motions, really hard. Having founder market fit, like selling to the, I was like, I'm not in sales. Like historically, my co-founders weren't in sales historically. We tried to get smart on that. I talked to VC whose advice was like, it takes about 2 years to learn enterprise sales if you're a technical founder. And I was like, that's about the amount of time I spent at it. And by the time I got good enough at it, we were like not doing that great from a money perspective. And I was like, this other thing is better. We're going to do the other thing. So that was tough. But I do feel like I got this merit badge for being a VP of sales, just learning a lot about it, which was very fun in retrospect. So building for the end user versus the economic buyer, big distinction as well in terms of like where you're getting better and where you're putting your chips. And it's hard to do both. So I think that would be, that was a mistake we made, is attempting to do both for a while. And then, if you're selling at market and your competition raises a lot of money, you can just get like priced out of the market. Like they can just beat you with like putting more effort behind sales and just blanketing the market with, information, with conferences. And so that was tough for us. We'd only raised $10 million and our competitors have raised hundreds of millions of dollars. And so, that's also bad because they can say like, hey, look, this other startup, they haven't raised that much. If you go with them, they might go out of business. Like we're going to be around. We've raised more money. Like no one gets fired for buying IBM. And so that's like just another thing you have to overcome when you're trying to sell into bigger deals.
Yeah, interesting.
So things like outbound sales, sponsoring events. We already talked about virality in the document viewer. We thought it'd be viral. It kind of was, but it didn't matter what we did in the document viewer. We tried all of these things. None of them.
Especially if you're trying to be light about it. Like you can, like if you're trying to be like respectful about it, it's there's not a ton you can do.
But even when we were more aggressive, it didn't work. We were more aggressive. We tried it, and then we're like, didn't do anything, and it made people mad. So we're like, okay. Like we tried to do partnerships or integrations, and none of that moved the needle for us at all. Demand gen didn't work at all for us. Any short form content didn't work at all for us. It's like listicles, like BuzzFeedy things. None of those things did anything for us. So we tried them all though. So the things that went right seem obvious in retrospect, but we made it really easy for one person to sign up and get through the whole funnel and understand what DocSend did for them and like how it worked. So like the single player mode, great. Like it was easy to come in and be like, I get it. I send a document. I see what happens to it. I can control what happens to it. Like this makes sense to me. We found like really good fit with like the niche of fundraising, which you were trying to do as well, but that was an underserved market. Like nothing general worked for that very specific thing. So it was easier for us to be like just outstanding above the other options that were there. Like the word of mouth spread within founders and investors was great for the product, but just even between use cases, like just building a great product like has these knock-on effects where if you build for the end user and the end user really likes you, people generally talk about software they really like. So that worked out well for us. Having a flexible product was great for like not limiting our TAM over time. So, when we were only at 15 million ARR when we sold, so there's still no like fear of that. But I'm glad that we built it in a general purpose way that certainly made Dropbox a lot more interested in the product, because the potential for it much larger. We did get really good results from research reports and content marketing around like fundraising research. And so
those are great. Those are still great. Those have been
they're super informative. And so what we would tell our team is we're not going to verticalize the product, but we will verticalize our go-to-market. So vertical marketing. And so we had a team that just did these research reports for fundraising. And they were great. People loved it. But like that didn't matter for sales or the other use cases, and that was fine. The research reports were super informative. They gave us like all this like press and earned media, and they even if you didn't use DocSend, they were so helpful.
No, for sure.
Understanding what you should do in this really wonky fundraising process.
Yeah.
And then incubators and VCs, we already talked about that as like a good channel for us. And that was very specific to us. But I think for any company, figuring out like which even very small channel you have like a hope of like getting into, is anything evergreen is going to be huge. Like anything where you put in the effort once and it spits off awareness of your product over time is huge.
Yeah.
I won't go through too many of these things. 90% off to startups, that's a little bit more normal now. Help Center, I really think if you're doing product-led or anything with a small ACV, building out your Help Center and investing in support is huge. Our support team always sold more product than our sales team. It was just because like people had a few questions here or there. They'd talk, they'd convert, be done. They'd set up a meeting with sales. By the time like when sales showed up, they're like, yeah, no, I already bought it, done. So like support was great. Like increase your pricing. Like so, we increased our pricing a lot. I feel like that's a little over talked, but for us it worked great too. Focus your scope, like just have high urgency in what you're doing. It was very smart for us to expand into data rooms and e-signature. And then the last one is just the message market fit. Even if you've got a great product, play around with how you talk about your product, because that's going to matter a lot to your end customer. They're not going to bother giving you a try if the language isn't something that speaks to them and is compelling for them to actually put in the effort to go try.
This is super. That's it. Could we stay there for a second? And just, it's super cool to see, because I think that the idea of, and I maybe I've heard about this before, but I don't think I've seen it articulated that well, but or as well as you put it, of the support channel being a sales channel, where like and thinking of that as a, and I think I'm understanding that correctly, where like investing in really, really high quality support like pays, not only keeps your customers happy and retention and all that stuff, but actually can be a net revenue driver from people signing up or upgrading, and or like the word of mouth cycle. Is that what am I?
Well, 100%. Yeah. It's one of those things where it's very clearly high ROI for us, but like measuring it specifically is like tricky. But we would, our support team would have live chat anywhere on the site, and like anyone while trialing, like we don't know like how much you might pay us, so we don't know should we invest in our time in you or not. But invariably it was like just always worth it to invest the time, answer your questions, like make sure you understand the product, because that helped us have learnings on how to make the product easier to use. Also had learnings for us on like how to talk about the product back to the marketing site. And then people got their questions answered and they just bought the product. So like the sales team, when we looked at like the sales touch, the support touching something to closing, like the support team just had like amazing stats around.
Interesting. Support sales, like a support sales mix isn't, you don't hear about it as much, because
the support wasn't trying to sell. They were more like, they're like, do I need this thing? Like yes or no? Just trying to help them.
And then I wanted to ask you about the on the pricing side, how scientific, because I feel like we went through this exercise again with the one-pager stuff, and like how much art, how much science on it when you were putting this all together, and how did you, and any false starts? Because in our experience again with this, where I don't know, it can be hard. You don't get unlimited tries at pricing. Like you can really screw it up. Like you don't have a ton of data, and you don't want to leave money on the table. You don't want to like piss people off by going too high. Like what was the process on like deciding on 45, right, and not 49, or not, how did that go down?
So anecdotal, and I thought about hiring a fancy firm, and then I was like, I don't think that's a good idea, and also we don't have enough time, and I don't have that much money. So me and Brian, and it turns out if you ask users how much they pay for you, they lie.
Yes, they do.
Read some good blog posts about like how you can structure your questions to like try to get in the right ballpark. with people, but it's easier if you're selling to enterprise than it is if you're selling to the end user, because there's a giant difference in willingness to pay for the user base that DocSend had. So the $45 a month price point was just because that was the average price our sales team was getting negotiated down to. We'd start off at like $90 or $100 and get negotiated down to 45. So I was like, fine, just make the sale. Because that was where we're selling sales. Just make that 45. That's the average that we sell when we get negotiated down. So maybe that's the market price for that. Also, like lined up well, is like cheap relative to other sales specific tools, but like expensive relative to like a box or Dropbox type of product. And then the personal at $10 a month, we had no idea. We're just like, I don't know. I think the internet should have like a pretty cheap send and track a PDF function. That just seems like a cheap thing the internet should provide. So we're like, great, personal send and track a PDF. And then we had all these calls with people that we couldn't quite place with like investor relations or financial services or investment banking. And they were super price insensitive. And it looked kind of wonky to have it just be 10 and then 45 and then enterprise. And so we decided to just put up what we called at first a finance plan for 150. And the thinking was like, well, it'll make 45 seem cheap.
Yeah.
And so that's why we have 45 highlighted, because that's what we thought we were going to sell. Turns out like the finance, which we then renamed Advanced because that fit better because it was like all over the place in terms of who was buying it. Like, that actually started selling really well. Like people wanted to pay more. And so that's where we focused our time. Was just building out the advanced feature sets. It's like dynamic watermarking, it's the data room functionality, it's the one-click NDA, or it's the NDA management. It's a whole bunch of these like interesting workflows that people really want and didn't live anywhere else. And so we put those all together in Advanced, and that worked super well.
So funny pricing.
I know.
Pricing, man. It's like so big too. Like it's such a huge part of like what the model looks like, right? Of like when you're actually like doing the like, how many people are you selling to? How much are they buying it for? And like,
your TAM.
Yeah, exactly. Yeah, exactly. And then in practice, it's like, who knows? Like it's so, because you can't, we did a whole survey thing. We tried whatever, like, and you don't have like unlimited goodwill with people too. You can't just like throw it around, or experimenting is a great place to have people be super pissed at you. Cause one person got an email about this price. Another people got an email about this price. They're like, what are you doing to me? Like, why is my price higher than, but it's glad. So you
dark art
shot and it worked.
We tried to do variable pricing too, which totally didn't work. We tried to have it be volume based on how many visits you were creating, or like based on how many documents you're putting in.
Yeah.
None of that worked. One wonky thing to notice here is that the advanced plan has 3 users included. So it's almost the same price as the standard.
Interesting.
And the reason we did that was it was a lot of like single seats in like high security use cases, and they were sharing their login with other people on their team. And that was like just ruining the whole point of security, because you're like, okay, someone's link got leaked. Who shared it? Like, I don't know, we're all sharing a login. And so then we would get in trouble for that. It's not our fault, we're sharing a login. So we just had it be 3 seat minimum so that wouldn't be as much of a problem. And so people would expand a lot beyond that, but it was a lot of money, like actually at that price point where people had only used 1 or 2 seats, but it was still worth it for them to pay that amount of money. And they're very happy to do that.
Have you thought about, like, are you happy to just have it like if figured out, and do you think about pricing at all anymore? Like usage is like really kind of coming up, and like, do you think about pricing still, or is it just kind of like this works, let's not touch it?
Well, with DocSend, when it started to work, we were like, okay, let's leave it for a while. We'll come back to it later. We ended up changing the messaging a lot around it. We didn't end up changing the price points.
Yeah.
When we did this one, we also got rid of the freemium or the free tier.
Yeah.
So we killed the free tier. And it's still there. It's still hidden. Like if you just don't pay for DocSend after the trial, or if your credit card fails, we don't just like delete everything in your account, right? That would be pretty horrific. So you kind of go back to this hidden free tier. And then it's like handicapped in ways. And so then you have to put in your payment information to get back and get the rest of the functionality. So we didn't revisit this. We thought we would in the future, but it was also performing so well that there were just other things we wanted to work on.
Yeah.
So we just kept adding more functionality to the advanced plan. And so, it was also a transactional price point. So like, could we have charged more? Sure, but then maybe our churn would have gone up. So it's like really hard to say.
Yeah. Interesting. I forget where we were in the presentation before I brought you to the.
That was it. That was the end.
Oh, perfect. Great. We're right on
Yeah, this is
schedule.
just the summary slide of all the things. So be patient, takes a while, fix rough edges, like just keep making your product easier to understand, like listen to and invest in support, get pricing right to your point. Although
Yeah.
what does right mean here?
Yeah.
That's
Good luck.
impossible to say, but like think about it a little
Yeah.
bit
Be
more than
thoughtful.
you would
Be
otherwise think
thoughtful
about.
about pricing. Yeah.
Yeah, I did hundreds of interviews with users and like really did a lot of research and like it's still a shot in the dark, but at least it's an informed shot in the dark.
For sure.
Find evergreen awareness generators, like even if they're small, they're just things that like kind of spit off awareness for you that keep making people aware of your product over long periods of time. And then be the best at something narrow. Like it's especially when you're trying to do anything that's self-serve or product led or inbound or whatever you want to call it. You're not going to have word of mouth unless people love your product. So be really, really great at something narrow and then just expand from there.
Yeah. Speaking of being the best at something narrow, Distill.fyi.
So the new thing I'm working on with Tim Su is, I think you did a great job at beginning, Adam, like talking about it, which is, the problem of, hey, ahead of a call, I need to go research a person. And, it's the situation like the president's got the person following them around, like telling them about who they're meeting with. Or,
Well, who's next?
who's like prepping for
Veep. I'm thinking of the Veep. I don't know if you ever watched that show, but there's the bad guy.
I haven't, but yeah, I know what you're talking about. So yeah, that's it. We're just trying to create these great profiles on people.
Yeah.
And so it's just in beta right now. So you can sign up for the beta, Distill.fyi. It's really fun just to play around with LLMs, play around with the different models. Try to do entity disambiguation. Is this the right atom? Is this the wrong atom? Pulling everything out of these sources, and then you taking this fuzzy information and trying to make a story out of it. It's just something that couldn't be done before. So it's really fun. We just started in February, so it's very early days for us. But we're also hiring mostly engineers. So if anyone listening wants to learn more.
So this is and you're full and let me I'll go back and let's see what what this has to say about it. Yeah, so you're full time on this now.
Yep, we wrapped things up at Dropbox, parted on great terms, and took some time off. And it's just fun to build at the early stage. So with all the LLM stuff that's new, this is a great time to go try something different. And this is a little bit more similar to what I used to do when I was at Meta, actually, around just like identity online. I worked on the Pages team for any business identity on the internet, and so this is a little similar to that, which has been fun to get back to.
Yeah, very cool. I'm excited to get into it and to try it out. And we definitely, I think obviously in like the founder, or really in any space, like it's similar. You're going down a similar path, right? Where it's like it's very knowing who you're going to meet with, knowing who you're going to talk to, researching people. You could just off the top of my head, I can think of so many different use cases.
It's very general, And this is another thing where we want to have it be a horizontal product. Market vertically, because you could use it for sales, you could use it for fundraising, you could use it for any number of things. So getting the messaging right there, but also the differentiation of the product will be different by use case. But underneath it all, as you pointed out, is a very similar workflow of like, I need to learn what there is to know about this person. And
interesting.
What are their interests? Like, what are their GitHub projects? It depends on what you find. Some people are very private. There's not a lot to know, but at least, Distill will tell you that they're very private and there isn't that much to know. So don't stress about it. In other instances, there's a lot to know, and you can find some really interesting nuggets, either for icebreakers or to just show up prepared and have the other person feel very flattered that you know so much about them.
And what do I do? I click this, I fill this out?
So you get filled out. Yeah, we're, as I said, very early, working mostly on the back end stuff because there's a lot to get right there. Like Doc said, I think this is something that will seem easy at the end, but actually underneath is pretty tricky to get right.
Those are the best. Those are the best products where no one knows how hard you're working.
That's true.
Yeah. Well, hey, Russ, I really, really enjoyed it. I'm glad that, as a former would-be competitor and someone who talked about DocSend and how we're doing different, it's really full circle for me. And I'll have to share this with my co-founders. It'll be like, oh my God, I can't believe you talked to Russ about all this stuff. So it's been super awesome for me. I think it's been hopefully educational for everyone else that was on the call, the over 190 people actually who are here live, according to whatever the number is. Yeah, which is cool. I still don't know. I don't know how accurate it is, but 194 people supposedly, which is good by me. Again, thank you to Walter from Sakura for bringing us together, and we'll get this recording out, and I'll bug you on the email thread to follow up with some of the stuff when we get it all cleaned up.
Cool. Sounds great. Thanks, Adam.
Thanks, Russ.
All right. Bye.
See ya.